What's going on, YouTubes? Time for that recap. So this morning, let's get into it. The Q's looking weak, leaning to the short side out of the gate for us. Let's talk about why. So we had a couple different push days here, right, leading into the week. We had a beautiful moving average catch up here on our impulse day into Monday. So Friday, huge reverse here, right, coming out of the gate. Came down for that big old Monday algo, right? Tuesday higher low up a little bit, and then just no reason to hold gap ups, and I'll explain that here. So we had a very large algo wick here that I was watching for today because we ranged up very close to that 1618 from yesterday's pre-market. Could not get to that 1618, but we did hold the 100, right? So we talked about anything over that 100 should move to the 1618 live tag because that's what Fibonacci magnets do. That's what computers do. We like magnets. So we set a live tag of the 1618. And if you take a peek at that, well, yesterday's highs is quite a bit far away there. If we mark that yesterday's high out right here, excuse me, during the live session, you notice yesterday's highs is quite far away, right? Approximately, from where we were calling our trade, about 80, 90, just slight of 97 points there on the NQ. Now, the 1618 blue level is what we leaned on the hardest for that short because of the shies, right? So you look back in history here, you see where we got the algo, you notice no live price tag, but we got a good defense of the 100, right? And then a move back up to the 1618, but eventually that was that overnight run up, which no real reason for. We don't have the news. We don't have the psychological catalyst to carry us up for a gap and go again. So we were leaned to the downside this morning here, looking for a slam down to yesterday's highs because the fake gap up, just no reason for it. Where's the CPI? Where's the FOMC? Where's the world bending news that would cause the market another gap and go from the potential government open voting, right? We already had the catalyst that ran for a day. Now it's running on fumes until the actual news hits, right? So we picked to the downside down to yesterday's highs and a couple other targets. So this is what we had. A live tag of that 1618, and if we stayed under that, we would shoot down to the green GP, and then under that, we would come to the gold high-low. So every single day we come into yesterday's highs and yesterday's lows. That's where a gold Fibonacci will be on my chart because I like to chart off yesterday's highs, yesterday's lows, and I focus the targets of retracements if we are inside that daily candle. So if we are way up here for no reason, the likelihood of traveling back to yesterday's highs and then the GP for the downside is very, very high, especially since we had algo targets and algo supports that we clicked off multiple days ago saying once VIX came into this channel of 1707 to 1725, that was the big support watch for VIX, right? And we're going to go all the way up towards 18. And then we do have some further targets way back here for even higher of 1830s and beyond. So if the catalyst here the last couple of days of the week is crazy, the VIX can still come down to 17 sub, but the first tag metric was the most important. So we came into this support. We called that from the gaps that we had left open way back here. Please, drawing tool. There we go. On 11.3, we had 3 different gaps, and we shied that right here, which means price action on 11.5 came down on VIX, almost hit that box to fill that range, but didn't, and ended up having a parabolic move from that shy up. And our target was 2150s to 22. Now we hit that all the way back down, and we finally came back to the zone it shied back on 11.5, and today being 11.12, we finally came into the VIX support. So that was a really big catalyst for us for the opening morning drive down. If it stayed under the live tag, so all live had to do is clip right there, first candle, the 1618 in the blue algo, and we would fly down to the 100, and then we gave ourselves multiple other targets to the downside with algos. If you delete that other pre-green, you can just see that beautiful, beautiful tag of the 1618 pre. Didn't really need a live tag if it was under the 1618, and then right to the GP. So SPY, on the other hand, had a very resilient day, a little bit tougher to plan here, but all in all, it was there. Let me show you the setup on this guy. So yesterday's high-low was a very, very big one where we had a fib. As always, we take yesterday's highs, yesterday's lows, and I make a gold Fibonacci for it like so. And I work with retracements. We're either over yesterday's highs, right? If we would have held yesterday's highs, we would have looked for the extension out to the 1618 from the Fibonacci of yesterday. If we break into the highs and go into the body and to the action of yesterday, I look for the golden pocket of retracement. It's that simple. So when we came into the pre-market, again, being in a gap up and holding yesterday's highs, I leaned to that short side because we had a chance to come down to that GP, right? And we got the same thing here on SPY. Very nice and clean. Thank you, VIX. Now I'll show you the one other move that we set up for our trade chat before I left at the 10 a.m. So we had this beautiful move and there's a shy. And you know me and algorithm targets and algorithms love to come back to indicators if you're smart enough to wait to Fibonacci and confirmations. So we said here, the first tag of the GP would cause a bounce and we would look for a long to the 100 EMA here in the green. But why would we do that? Well, pre-market here, obviously, live here, you'll notice that open was very close to the 100 EMA, but it shied it. I call these little scams, right? They come down and it pushes up and it almost hits a target. There is obvious price action, very close, but never tagging into that 100 EMA. That's a shy. So the price action got shy, couldn't click into the 100 EMA, stayed very weak, very controlled to the downside, and ended up hitting a very resilient, biggest metric we use, day trading, is the daily GP. So I told my chat and I said, all right, guys, when it pumps into the golden pocket, anywhere here, and I drew a gray box for them here, might even be on there. I'm not going to sift through it all. And I said, once we hit into the GP, just long it back to the 100 EMA. And we made that call at about 9:55 right here. We said one more leg down on the short, let her hit the 50 fib, which is just yesterday's high low. And that's the golden pocket, and long it to the 100 EMA because we never got a tag of it at the open. And it deserves, after about 10:30, 11, a tag back up euro close for reverse. And then I said, if it does hold that golden pocket and gets over, just go long for the rest of the day. And we got that right there. So we did call this piece right here into that 100 EMA, beautiful 13 points on ES. And then we had a monster rally all the way back up to some of the prior tops and consolidated. What's next? That's always the question, right? Well, as we know, ES futures trades here, we have a lot of targets coming up. We still are looking forward to that upside, right? I have an interesting fib here still from the last couple of days of a triple 15, and this is the one I've been using a lot of. So we had a quad 1 minute and a 15 fill. So what I'm looking at here is candles in a row that still have GPs open, right? If you notice, there's 3 right there. We filled 1, right? That was the plan for the long. If you go here and fib this out, we'll zoom in real quick. On the 15-minute chart right here, there was 3. That one got filled. 1, 2, 3 candles on the 15-minute chart, 11:45, 11:30, 11:15. That impulse move was fibbed out. And then we had the right to move that sucker up. So the last video I was called 68.40 up to the 5-minute gap, which we played out perfectly. That was the long scenario from either here or here. We called on X. That worked out very well. We ended up hitting our 2618, and then we called short all the way back down to the pivot. And if we got lower, it would have been 68.40 again, right? But it didn't quite go back there. So let me teach you about pivots and where we're going to go from here. Pay attention, the price action, because people think magic happens on this crystal ball. Pay attention to the verbiage here. If the market holds the 1618 right here, right, and we don't see too much death, and even if there is death and we come into the live open and we're above that 1618, I will see you up here at the 69.26 extension of 3618 from here. If we are under that 1618 getting close to open, we will have a chance to retrace for the rest of the GPs that are left open. I'm still slightly, in a macro sense, lean to the long side until we get that break of the 1618 here. So if we hold up, which again, we broke from this triple up to the 1618, came back, filled the last no GP tag, right? 1, 2, 3. Up to the 2618. We did a good cycle. Now it defended the 1618 once, right? 68, 60. If that defends again and holds, and even if it panics out and makes a weird recovery and stays over the 1618, we still have higher to go. And we do have an opportunity to see quite a ways back where we could be going from that old FOMC dump. And if everybody knows me and my fibs and my gappies, I do like to target those open gaps much further away. I'm not going to explain why this gap matters only later instead of right away. That's for the private members, but this gap is still going to be one of those targetable offenses on the way back up into this reverse. So again, even if we get a chop or some harder dips, we are in a buy zone still to 6,942. That is a 5-minute gap and an imbalance we left open during FOMC. If we go to the daily chart here, we got quite the reversal. Strong candle on ES there, breaking back up. And I still think either a sweep or very close to that all-time high is possible before we really get some downside. If we're looking at some of the metrics here, on divergence of oscillation indicators, which I enjoy using still. I know they're old and a lot of people are a little confused on how we still use these perfectly, but they're there. They're not going anywhere. You notice that 50, right? So that 50 RSI came up, almost hit a hot, did not. It relaxed perfectly to that 50 again. And now it's looking like it might want to do another rip rally off that 50 RSI. And we could get a sweep and push over these highs before we come down later into the year of 2026 as well. Now, the MACD is not looking overly healthy, and we have two scenarios that are going to really help with this pivot. And as far as the daily is concerned, this doji is one of the big things that I have on watch as well. It's a little fat body doji here. So I would mix that 1618 in right here. I would mix this GP in right here on the daily, right? So keep that 15 on. Let's move to a clean chart. We'll also throw this guy on. And now, where is that level? 6,924, right? Oops, where was I? There we go. 6,924 on the fib. Look familiar? Within a couple points, right? So let's go again. Here, right? Down to the 15 is what we call overlapping fibs. The more points of interest we can overlap, the better. There we go. So this is your box of support or resistance over under for the game for the rest of the week. To me, right here, 6,860 to 6,866 has a great chance, even if it slips down a little bit, to hold as support, to break through the 2,618, and by the end of the week, land right here. Okay. And then obviously we do have that 5-minute gap that is still pretty far back there, and it's a smidge higher. So I don't know what it's going to do with that. I'm usually out of these trades a little earlier than I am holding these forever. But if we go back to that 20-day here, there we go. We see that gap. We'll do another white marker just real quick so that 5-minute gap is seeable. The 423 of the same exact triple 15 we just keep talking about here. We just fibbed out again. The 423 is that gap. If you stretch that out a little bit, this is what it's going to look like. Anything over the 161800, big target this week up here. And then it could go a little higher to here. That's extension. That's like a bonus round, we call it. So the meat on the bone on trend is if we hold above tomorrow with data, even if we get higher, action over, we're looking there to 69.25. If we break to the underside, we obviously are going to look for confirmation of trend, lower high, lower lows, structure breaks, and we will target the rest of the 15 GP that we did end up shying, okay? Because we used a range, right? So just to be very clear here, back to this 15-minute, I'll make it neon green. We'll make the daily chart that doesn't have a GP gold because we like daily golds. And that's the difference between the fibs that you'll see. The neon green is the 15. And the gold is the daily no GB we just checked out. And look at that. The green GP is nestled perfectly in between the golden top pocket of the daily. So your two plays and our job as day traders is to figure out the confirmation holds here to push and chase here, or the confirmation breakdown like so to push here. So good luck, everybody. Play those levels correctly. We'll catch you on the next.